Okay, this is the market wrap for March 13th, Tuesday. We had a pretty interesting day. I'm just going to go back on what we had discussed yesterday with the small corrective. Didn't quite look right? But the higher target for the 100 and that overlap at the 1441. We didn't quite make the 2808. I think it was 2806, but it was really close for that target. And as the corrective took hold, we'll start discussing that as well. I do apologize for not being streaming today. I had some issues with one of my main systems, so I was repairing that and getting everything settled here. But basically, everything did play as, get up to 2808 area and then look to the potential for, as we had discussed, the move to 72 to 67 area, which is pretty close to where we bottomed today. So I was doing some analysis on this because I haven't had much time to. But essentially, the A topping C and what degree of a B wave are we getting here, right, is the primary question. So let's go to the 5-minute. And on that degree, okay, you can see that of this larger degree from this low here, which was pretty impulsive, okay, we just tagged the 61.8% retrace. Now, generally, I like that fib. It's just not generally in rotation. Generally, we go deeper. And looking at the A to B to C primary relationship that looks obvious, A to B to C, that would be this 100 area here, maybe even as deep as this 45 to 42 area. Now, will we get a bounce and then a move down into that direction? It's possible. From this vantage point with, such, vertical down, very easy to attack that area to see if it holds. Now, this area is extremely important because it lets us know whether it's A to B to C to complete against this degree, or we're looking at a B wave bounce and then the possibility of really going someplace a little bit deeper, which would really do some serious damage on the front week calls that are expiring come Friday morning. With an A, B, and a C, a B up, and then potentially another C down to a very deep degree. Generally not my preference, but I also know how magnetic this resistance line had been earlier in the week. Now, we escaped it, or last week rather, we escaped it, but it may pull back as that was the primary trajectory at that 764 right there at 2680 for where they wanted to settle up, this option week. They let it escape to let that book get nice and thick, and it wants to go down there. Now, I don't have that supposition quite yet. I really would prefer for the A to B to C of the next degree higher. But I do have to say, with the front week premium so thick, there's a very good possibility of it. So the modus operandi here, what we'll be looking for in tomorrow's session is going to be, will we get A to B to C getting up and over that danger zone, or complete the C, come up in the B, and get A, B, and C of it down for yet a further degree. So really, most of the circumstance, guys, is right here in this general area right here, anywhere between 54 and 42. Surprise, surprise. So this general area here is going to be the one. Whether I get another degree, I really don't care what its amplitude looks like. It could come up here and then just come straight down to there come tomorrow morning. Well, there's something else that I noticed here on this last extension, A to B to C. It went to the 92% extension. If we got to A to B to C, there's that 92 retracement. So maybe there's a harmony between those two fibs here and here. That might be the plan. Flashed us a fib of importance, and we may see it tomorrow. Secondarily, I want to show you something I also picked out of this pattern that I think is a little bit more sneaky and possible. coming off the top, A, B, and C, A, maybe a small b, and an A, B, and a C down for the larger A. Then B, you'll notice we didn't get over that high, so that is a valid B. A, B, C of A, B, and then C. Now you'll notice of this degree, the A, the B to the C, it went right to the 108 extension in harmony with that 92 extension right there. So there is some credence to expecting that maybe this is complete and we want to go higher come tomorrow. But looking at it overall, this looked very, very complete to me on the larger degree. A, B, C, A, B, C, okay? Is it A, B, and C? Or did we complete it already at the 1441, which is a pretty high extension for a C wave? Totally plausible. This area, this support, this blue line here that's rising tomorrow, and whether we break away from it and then start breaking down under this low, this red line here, which we have at 2737 thereabouts, is the critical moment. We break 2737, it could deluge down to 2680 rather quickly. So I just wanted to go over those few potentials. My general preference is just to grind a little bit. If we've got the A of this, I mean, we can come down for that B, and we could just kind of grind into the rest of the week in a B wave. You know, kind of taking most of this bounce back and grinding premium out until expiry, then potentially making a next degree lower for the slingshot higher. So we'll see how the action develops overnight. I'd say that the critical level really is here at 38. Breaking that 38 says a larger degree down, something more impulsive, maybe even something larger than against just, you know, this degree here. But for the time being, of the larger degree since we came off of the low, guys, if this was the B wave, the C wave is going to break all of these. We'll be below 2650, and you'll know we're in the larger correction. Until we get below 2737, everything seems okay. It can go a little bit deeper and really kind of fizzle out for the rest of the week. It's got a good resistance. It escaped it for a moment today, and then boy, did it push back. The support was also quite good. So let's see. I think, you know, you look at the median here, that's pretty much where we took the first leg, the lift off. I mean, we came right back to it. So it kind of lopped its head off a little bit. Is it going to meander out, or are we going to get something a little bit more violent? I'm going to take a look at the XPS option book to give you a semblance of how the premium lays out. So the imbalance, let's see if we can just going to tabulate here. Right. So the imbalance shifted a good $20 billion, or about 17. Most of it is concentrated in this front week option expiry. Now, this had surged to about 32 yesterday, so about 5 billion disappeared on the call side. Not a huge amount, but this is going to start accelerating rather quickly, because every day you're not closing out unless you have a very deep intrinsic value. You're getting hit with time decay. So I think tomorrow could be a pretty dynamic day for letting us know which intention this market has. Waste our time or start moving down strongly. You know, if it moves higher, it's difficult to see the, you know, a whole new degree higher here without at least getting a semblance of an A and a B. So we'll cross that road when we come to it. I'd like to see us up to get to, you know, the 28, 32 area, the 38 area. Whether we will after this showing today is really the question. So I'm going to take a look at GC really quickly. GC did everything I was hoping for, getting up. I mean, we looked to that high yesterday with the follow through. It still didn't look quite correct on the follow through here and not making a new low. So I actually prefer this move, even though that was a pretty sneaky little angle that was thrown in there. I don't even know whether to really accurately measure off of that, because I believe that came with the release of the inflation data, or leading up to the inflation data, and caused a big swivel. But I can say that the A to B to C relationship sure works a lot better having that there. Otherwise, this would need to extend higher. Now, I'm not saying that it won't. I just kind of like this area. Resistance looks okay. This thing has responded well to resistance before. And really, if it's the median, I could see a degree higher here. A, B, and then C, maybe something to really test the middle at that 1335. But the A to B to C relationship that this now has, and pretty much perfectly targeting 1300, is something really to pay attention here as well. So it's got rising support into the evening. If ES starts to slide, I can see this going for a, this really loves to go to very, very high retraces before it turns down. I mean, this thing could go to the 1340 price before it slowed down. I'd still, if that were the case, I'd still prefer to see a B and then up into it. But it had some gusto today. It slingshotted around a little bit. Now the question is that completion? Now this didn't look very complete either. You notice a very similar stature here. And then it took a very clumpy slide. So not so sure yet. I had a much better read on getting to this 1330 area. Now the question is getting to it and then, surrendering under 1325, let's say 23.5, starts begetting a breakdown. But thus far, it's worked really well within this range of its established channel. It's working its way against this topside resistance. If it pops through and pops back under, then I could see it just kind of meandering down. But, this looks a lot better to that 1330 area. It almost made my price. It was 1329.5, so I missed it by just a smidge. I think it could still come up for that last degree. I like that 1330.6 really, because if it gave you A to B at the 618 fib and lit up a third wave downtown and didn't really make it there, it looked gusto, but in a quick couple of sessions made that 1300. That could be a really nice flush out for a bounce. So that's kind of what I'm looking for right now. We'll see with these resistance areas, but really, the way that gold likes to go up really high against resistance areas and then return, this area is very permissible. So we'll take this one area of resistance at a time with strong pushback. What I generally want to see here is A, B following through, and C that looks a little deep. Then there'll probably be a nice B wave bounce and then one final short to run it all the way through. So let's see what we get on that. So that's about it. Again, guys, I apologize I wasn't on today. There was a lot of really good trades to be had and some good points to be had, but I hope that you use the video as a good point of reference if you needed to. That's kind of why I'm doing them. I want to start making sure that people have, a reference of notes, because things in life happen. So we are about to reopen at 6 p.m. So I'm going to just stay rolling for just one more minute here and take a look at what they're going to do. So we just got a nice little drop here. Now, is it going to find support and start climbing, or are we going to break through to get that 100? Because that 100 degree of the final degree, A to B to C, is here. And I believe that has overlap with this 1441, which is confluence of the degree above. So it's pretty close right there. And what if this is 108, just like the last degree was, which I believe it might be. Get rid of that 764, it's not necessary. Also in the area of that potential. So let's see what it does. I'm going to leave the standard A to B to C relationship at the 100 here, but it's got a possibility to just flash down to this 52. I'd prefer for it not to hold the 67 area. This does a lot of damage to contracts both ways, holding still on the overnight. So really the alert is below here on the first degree, 61, and then really below 53 could be a problem. So those were the general alerts I'd have here. But essentially, guys, it's 2740. 2740 says we're breaking to a new degree. There's lots of deep retraces in this market action, so I got to give it a little bit of a wide berth. I mean, what do you expect? We went climbing like crazy in just a few sessions. So they're taking some of this back with that option expiry. So this is still our critical area from 53 to 40, basically. Breaking that area with some gusto says we're going 2680 potentially. So I hope you had a decent day. I will be rolling live tomorrow morning, and I wish you a very pleasant evening. Cheers.